Okay guys, I would like to explain to you what to do in Monopoly hand-in number 3. So my 3 got cut off a little bit. In rule number 1 for you, if you see right here in the grading sheet, I want you to make sure you clear prior comments before you move on. Otherwise you will lose 3 points and I will have to deduct the same comments again. So I will go back and highlight saying you forgot to fix your subledger, or you forgot to get your reviewer, and I hate doing that. Once you're done, we will continue doing all these steps, and I actually did them journal entry by journal entry. If you flip a couple of pages, you will see that there is actually instructions for the adjusting journal entries that you need to complete. And the very first one will be a correcting journal entry. This is only applicable to those of you who had cash, so this is your physical cash on end of day 2 or end of the game sheet. And for this person, this is the ending balance in the cash ledger. As you can see, they're different. There's a discrepancy. So in the real world, if you would have ended up with the balances like that, we need to make some kind of correction because you must have miscounted cash during the game. And that's okay, there's no penalty as long as you fix your error right now. So my physical cash is $210 less than what I have on the books. Well, as your boss, I have a couple of choices. I can request you to pay $210. So we can put it in the cash register, so to speak, and then we will be done. I don't think you will be very happy with that solution, right? And imagine if it's the other way around. So my books will show $1567 and then cash balance will be bigger. Then you'll say, hey, I can pocket $210. Well, that's a no-go. So therefore, we will match the books with what the physical cash on hand is. So look what I will be doing in this case. So my balance has to be $1,567. Okay, that's what the physical cash tells me. So it's a must. In this case, the journal entry is almost backwards a little bit. I looked at the ledger and put the balance there. And now I want to see what kind of change do I need to make in the ledger to go from 1,777 to 1,567. So I need $210 on the debit side, I meant on the credit side, because in this case my cash will go down, and it should. So I'm looking for, I'm gonna write AJE, but you please do write the date that you stopped, so that will be the date for all your adjusted journal entries. I need an adjustment for $110. Okay, so I needed to look at the ledger to figure out the amounts. As we discussed in class, adjusting or correcting journal entries are identical as far as the recording process, so you have to journalize them and you must post them. So we just posted already the correction in the cash ledger. So now I can go to the general journal and start writing it down. So it looks like this person must have stopped on September 30th, so you would write the date, and ledger said I need to credit cash right here. So I'm going to go ahead and write it in the journal in the same format. Cash, and it's 210. You can go ahead and put the reference because we already posted. And then the debit or the credit, depending on your type of correction, will always go into brand new for your account cash, short, or over. Okay, so you need to look at the chart of accounts to see what's up there, so you can find that. Post your debit balance, which is 210, and once you post, put the reference right in here. Okay, if you would like to look up more on that account, it's actually listed in chapter 8, so depending on the edition, it could be around page 352 in your textbook, and we'll learn more about that one when we get to chapter 8. Then you're done with your correction. Okay, what's your next one? If you remember, every time you go around your board up here, so off we go. Once you get to pass go, you will collect $200 consulting revenue from the bank. Okay, you stopped somewhere on the board, and you can look at the end of the game sheet again to figure out where you stopped. Let's pretend we stopped up here, somewhere on the leg 3. So you did not collect $200 yet, but we assume that you will continue and eventually you will collect your $200. So as you go, you start earning consulting revenue. If you pass through the first leg, it's $50. Through the next leg, another 50 or 100 in total. And then third leg, we're just gonna round it. That means you get $150 in consulting revenue already. So you will do the following journal entry. Credit consulting revenue 150. You cannot debit cash. Why? You have not collected it. Okay? Otherwise I will write for you, show me the money. Where is your cash? It's gonna be a cash to be or accounts receivable account. Third one, accrual for the interest payable. I put this from the rules. Okay, so all of you or most of you were borrowing from the bank, and of course I made you do that because I only gave you $2,000 to start the game with. So that's pretty small capital. And our interest is very little, only 6% annually, or if you divide it by 12, that's half of the percent per month. Okay, so very small. Now we're going to calculate the interest. You need to look at your purple subledgers for bank loan payable, and if you have not paid the loan right here, you need to figure out number of months a loan was outstanding. Let's assume this person stopped on December 31st. If your date is different, then you need to write your date of the end of fiscal year end. So the loan has been outstanding from February 28th all the way to 12/31. You're going to get your fingers and toes and carefully calculate months one by one, and you will end up with, in this case, there is an error. It's 10 months. We're not going to count the February. So January, February is out, and we should have 10 months then, right here. 10 months. And then multiply. So what is the formula? You take your principal, $2,000, times number of months, in this case it's 10, times interest rate. Remember, it's 0.5 of a percent, and as a result, when you're calculating, you will put in 0.005 in your calculator, then equal and put the dollar amount. Do it for all the loans that you have. Add up the total. That will be the amount that will go into interest expense and interest payable. If you end up with cents, please round to the whole dollars. We don't want to mess with cents. Next one, depreciation. Okay, rule number 1, land is not depreciated. Okay, because we never use it up. We do not need to allocate cost of land then over a period of time because it's forever. But we do need to take a look at both railroad and utilities and houses and hotels. So in this case, I'm looking at the houses and hotels subledger. So let's take a look. Houses and hotels are depreciated $1 per month per house or hotel. Okay, so our hotels are counted up as 5 houses. Therefore, I will put 5 for the number of houses, right? Times $1, because our rate is $1 per month, and then you need to come up with a number of months. Look at the first day of your purchase, 4/30, all the way up to December 31st. If that's when you stopped, you will end up with 8 months. So in this case, it will be $40 for this one. Again, do the same in this column. Total it up, that's your amount. You will go then in your journal, you will debit depreciation expense for houses and hotels. We have a separate account, and then credit accumulated depreciation again for houses and hotels in this case. and you will put the total amount that you come up with. Okay, then your next step will be do the same for railroad and utilities. So flip your subledger, take a look, except it's $2 a month. So you will end up with 2 right here as opposed to 1, but it's the same logic. And it will be another journal entry because we have a separate account for depreciation expense for railroad and utilities, okay, and accumulated for railroad and utilities as well. All right, we are moving right along. Next one. If you were to look at your trial balance right now, you will have a balance in your prepaid insurance of $1,800. If you remember, on March 31st, you paid or prepaid for the amount of insurance for the whole year. So as year goes by, you actually see a decrease in this prepaid insurance. It goes from $1,800 all the way down to 0 on the March 31st next year. We would have been all fine, except right around here you have fiscal year end, and you need to prepare financial statements. And I put my 2 fiscal years in 2 different colors. So this is one fiscal year, and in blue is a different one. So you have to make sure that if an expense happen in one year, it has to end up in that particular year. Remember that matching principle? We record expenses when they are incurred. So what's going on with my insurance expense? As time goes by, insurance expense will behave in the opposite way. They will keep growing. So I got to figure out what is this amount of my expense right up here. Okay, think common sense. Think as if you call your insurance company on December 31st. I'm going to put December 31st right here, or it's your year end. If you stopped earlier, then put that date and keep that in mind, please. How many months would be from March 31st to December 31st? Be careful counting again. So you should end up with 9 months. 9 months. What's your monthly expiration rate? You take your 1,800, divide by 12 months, that gives you monthly, then multiply it by 9 months because that's the amount that have passed. So come up with the amount here. That's the amount that you will be using in here and in here. Now, what are your debits and credits? So I'm going to go up here and write 1231. Your prepaid insurance was debited. It's a gigantic asset, if you remember. Now that asset was going down the hill. So we're going to go ahead and credit it now. Prepaid insurance credited for the amount that you calculated. And then what has been growing in blue up here? It was insurance expense. Insurance expense. Pardon my writing, it's actually pretty hard. Insurance expense. Posted in the T ledgers in the green, and then you're done. What about your next one? The same logic is applied to your unearned revenue. If you remember, unearned revenue was recorded again on March 31st. So as they rent your clubhouse during the year, you start earning your revenue in the same fashion. It starts growing. So at fiscal year end, right up here, you need to figure out how much has been earned. The same logic, you need to figure out your monthly earning rate. So how much worth of revenue do you earn every month? Month passed, another one, another one, another one, and then add up number of months that passed up to here. That will be your service revenue earned. That went up. So think credit. And then unearned revenue, that is a liability, needs to go down. And I'll let you tackle this journal entry on your own and write it down right up here. Again, what's your dates, please? What's your fiscal year end? We're done journalizing our adjusting journal entries. Now you need to post them to the ledgers, the green T-count ledgers, and then go back to your saved trial balance from hand in 2 and fill in the next two columns for the adjusted trial balance in Excel. Save it, upload it on Moodle, and then please don't forget to print it as well. Okay, it must be typed in Excel, no pencils, and after that we will be ready to prepare financial statements. Word of caution for you: if your trial balance is out of balance, try your best to get it in balance. There's several tips and tricks. They're the same. Whether it's unadjusted, adjusted trial balance, to get it in balance is the same way. So go back and recheck your numbers and watch the video on Moodle how to do that. If you cannot get it into balance, you cannot prepare financial statements. You must either seek my help or see a tutor, our consultants, so you can get it in balance before you can move on. Otherwise, just gonna compound your errors and it will be more difficult. That's it. Thank you.